Going on, everybody? It is Dennis, and we're back with another video today talking about the amazing distributions that are coming out of YieldMax ETF for this month of May, coming from MSTY, AMZY, APLY. All these huge dividend payments are coming out from YieldMax. We're going to go over what the dividend payments are, mostly focusing on the large ones like MSTY and AMZY and APLY, the ones that I mostly own. Besides MSTY, don't own MSTY. I do own AMZY and APLY and others. But good, huge dividends coming out of YieldMax ETFs, and it's very surprising to see. We're going to be going over why the reason could be that they're paying out such huge dividends. Did they earn this much? Are they just paying it out to give us a big dividend? Is this coming from our yearly end of the year payment? Are they distributing it throughout the months and weeks of payments? Let's go ahead and get it and take a look at it. Looking at their announcement for their payments, we're not gonna be going through all these dividend ETFs. You guys have YouTubers to look at this, and it's already Friday, so you guys probably already saw what the dividends are gonna be. But we're gonna focus on the top ones for this week, and that is first off LFGY. We have LFGY over here paying us $75.11 per share, 106.27% return, and this is a weekly pair. A weekly pair returning 106.27% of 75.11. That's a crazy dividend from a weekly. And of course, this is we don't know if this is going to last. Probably not. This could be just like a one-time hoorah type of thing. But that's 100% on return on capital. And of course, this is being paid out today, the time of this video being uploaded, the Friday. We also, of course, have their QDTY, and RDTY. And all that sorts. OLT actually paid 103.67% as well, at $11.81 per share. A lot of people got excited over that. YMAX and YMAG, of course, paid a small amount because they were paying from last week's payments. And of course, next week's payments will be high for YMAX and YMAG because of the high payments for this month or for this week from the monthly payers. So let's get into the top pairs for this month. AMZY, one of the funds that I hold, paid $79.63 per share. It's been a long time since we got close to 79, 80, 90 cent mark from AMZY. And we're getting $79.63 from AMZY at a 66.95% annual return. We have APLY coming in at $65.12, double of what it was from the recent months, at a 62.59% return. We have MSTY, of course, the one that everybody loves. Everybody loves MSTY, at $2.3734 at 125.12% return. We have $1.4128 from SMCY, one that people did not expect, at 100.76% return. And another one, of course, to MSTR, its underlying is MSTR, is $2.7190. From the reverse MSTR, so it's reverse MSTY, it's winter, and it's 85.04% return. $2.7190 from the reverse MSTR winter, beating MSTY, the bullish version of MSTR plays. And of course, we had XYZY and we had YQQ, the version of the QQQs. But crazy to see these dividends. And you guys might be wondering, why are we getting such high dividends? Well, if you guys do or do not follow Retire on Dividends, I highly suggest you guys follow him on Twitter. This is not a plug, but you guys should definitely follow him on Twitter. He's been starting to do spaces, and this is one of the very first spaces that he has done on Twitter, and it was with Michael Veneto. Sorry if I'm butchering his name, Michael Veneto. But he did a space with him, and in that space, they did discuss, of course, YieldMax ETFs and option trading, but majority YieldMax ETFs. I was invited to speak, but I was listening due to being at work at the time. And you could possibly hear me from time to time, maybe hop in and give my opinions in these spaces if he continues to have them. So if you do want to hear something from myself or from any other YouTuber or investor that you follow, be sure to tune in. You might see them on this space. So back to Michael. Michael did mention to be on the lookout for the dividend payments for this week. What I am assuming and what is being tossed around the community is that they are spacing out their dividend distributions to where instead of paying everything out at the end of the year, so usually they pay towards the end of the year. If we take a look at historical evidence, right? If we take a look at history, let's go to it's going to be the simplest to just take a look at my Google Drive. If we take a look at my Excel sheet, my Google Drive, we can see that at the end of the year, we got the highest payments from our dividend distribution. So we go ahead and take a look. Tesla paying us $2.50, right? We had Tesla paying $2.50. We had AMZY pay $86.19, $1.17 the month prior, right? So usually we get the highest payments towards the end of the year, right? We have GUI that got paid $91.8. We got Apple that paid $42.15. And the reason Tesla and GUI were so high is because they paid double at the end of the year. So that is also a reason why. But most of the high distributions come at the end of the year with YieldMax and all these funds. So what we're assuming now is that they're splitting, instead of giving us such a high payment at the end of the year, they're splitting these payments into every single month. So instead of, just dropping it all in December, they're dropping it now. They might drop it a little bit later in a couple months, or maybe literally throughout the months as we go, and just continue to boost that yield and keep it high instead of just dropping it all on us at the end of the year. Even though I kind of prefer getting it all at the end of the year. It's like a good Christmas present at the end of the year in December, getting that payout for all the dividends and we receive, and being able to use all those dividends at the end of the year and kind of refresh the portfolio and invest into some new positions at the end of the year when everything gets kind of cleaned out. But hey, they want to pay it throughout the year. They want to keep that yield high throughout the year instead of dropping it all at the end. Keep it consistent, all to them. I don't mind it. It gives us more money throughout the year to continue to invest and dollar cost average into other positions and grow and grow and grow. But that is currently what the theory is on what they're doing with the dividends and why we got such high dividends. Why we got 100% returns on so many funds, 125, 100. We got 85 on the winter fund. We got 103 on the old T. We got 106 on LFGY. But looking at my fund, you guys probably saw that on AMZY, I am still at 316 shares, and we got that 79.63 put into those 316 shares, giving us $252.03. The last time we got such a high payment was last year. Of December, November, October. November was a crazy one at 344.31, and that was a $1.17 payment for that. I'm not sure if it was a double payment. It could have been a double payment. It was a double payment because I could see that I inputted it myself. Or did I? No, actually, it wasn't a double payment. It was a single payment because I did the calculations for it. So this is a single payment of $1.1731. So the last time we had such a high dividend was back in last year of October, November, December. That was over the $200 mark. And now we're back at $252 on AMZY. That puts us at $838.79 earned from AMZY so far. And next week we have Tesla payments. So that's going to be very interesting to see how Tesla and GUI performs if they decide to pay out now, similar to what they did with AMZY, APLY, and MSTY. If we take a look at APLY, we got $197.37 at 65.12 to our same 303 shares. And that last time we got something close to that mark was actually never. This seems to be like the highest payment we've ever received from APLY, right? So we take a look. Most of the time it's in 56 was the highest, but we had not that much of shares, right? We only had 112 shares at that time. We got 17, 41, 38, 33, 40. So staying around the 30, 40 cent mark. We dipped into the 28s in January, but then we stayed again at 36, 34, 30. And now we got a 65.12, giving us $197.37. So quite nice to see in your portfolio. Just from these two funds alone, we are getting 252, 197. It's close to almost $400 earned. Actually, it is $450 earned around there in that mark, right? 200, 100, 397, like around 470, 480 earned from these funds. Or sorry, I'm wrong. 420, 430 earned from these funds. So it's quite nice to see this just from two funds alone. Like I said before, hopefully in Tesla we see some higher dividends. Imagine they pay us $1 for a Tesla. That'll be quite interesting to see. Getting $475 worth of income. Assuming, I think my share count didn't go up for Tesla. I'm not sure. I think it went up, or maybe it didn't. But if it did, or still, it was going to be around the 400 mark. So getting around $475, $480 earned if we get $1 dividend from Tesla would be quite nice. But don't forget also you lose that distribution as well. So what I mean by that is that 79.63 gets taken off the value of the ETF. So 65.12 taken off APLY, 79.63 taken off AMZY, and of course MSTY we have minus $2.3734 taken off the NAV. So it could be a good thing, it could be a bad thing if you think about it. technically, if you get paid out in December and you get the dividend, right? If you get the dividend in December, like the full amount, say like they dropped like, MSTY $4, or say like AMZY, they drop $1, right? And you get it at the end of the year, technically you could, and then you're at a loss for value, right? For your stock value. If you're at a loss, you could sell and get a little bit of tax write-off on that. Of course, you'll still have to pay for the dividend, but you could technically pay it off with the loss of value. And if it's return on capital, you don't have to pay dividend. And as you can see, most of these are return of capital. So you won't have to pay dividend, or you have to be less of a dividend. And also, you could tax harvest the loss of value. So I don't know, just to think about. But also, you could tax loss technically throughout the year. It's a whole complicated thing. I'm not a CPA. This is not tax advice or financial advice. This is just content to look at. But if we take a look at MSTY, the one everybody loves, we can see that $2.3734 was already put into my favorite website, Stock Analysis. They've paying $30.25 annually, based on all the history. So if you were invested for 1 year, you would have got $30.25. If we take a look at the overview of the 1 year, it was $30.61. So at this point, you would be break even on all the money invested. So, if you bought 1 year ago, you would be break even right now. If you bought at the dip, I guess you would have been break even as well. If you reinvested, you would have been maybe break even as well. A lot of math to think about, but yeah, it's pretty good, MSTY. But still, I'm not investing into it. Still not looking to invest into it. I'm just looking at this chart and seeing the dividend distribution go from 4, 4, 3, 2, 2, 1, 1, and then back to 2. But this is because, they could have added more into it. We assume they added more into it. But yeah, it was trending downwards. High 4s, low 3s, low 2s, low 1s. And it's the same thing before, right? 4, 2, 3, 2. 1, 1, 4, and then 4, 4, 3, 2, and the trend's back downwards. It could be a cycle. Who knows? Technically, Bitcoin is going up right now. But MSTY is unfortunately down. But like I said, that's because of distribution. As you can see, it dipped hard due to the distribution and went back up a little bit. But we'll see how it does. No opinion on MSTY. I know a lot of people love MSTY. A lot of people are retired on MSTY, but I'm still skeptical on MSTY just because I don't believe in the underlying MSTR. And they do have $3.5 billion in assets, so props to them. They're doing strong with that, and hopefully the volatility stays high, so they continue to earn high premium from that. But overall, that's pretty much it. Just wanted to make a quick video this week, talking about the distributions, the high distributions from AMZY APLY, MSTY. It's quite interesting to see. I hope Tesla pays out the similar amount for this next week coming up. I hope Tesla pays the high amount, GUI pays the high amount. So this could be a high paying dividend month, and we could go ahead and then maybe break out of the 3,000 mark, low 3,000s to the mid high 3,000s for the month. But also, SPY's been going pretty high, meaning my upper contracts, my covered calls have been stuck a little bit below the stock price of SPY. So there's a lot of catch-up games for me to do. So the yield's going to be a little bit lower when it comes to my SPY leaps for this month. TNA has been holding off quite nice. It's been trending upwards. Russell 2000 has been trending upwards, and therefore TNA to 3 times the leverage has been trending upwards. So overall, might be lower than last month on the option side, might be higher on the dividend side. But that's kind of a good thing of how I structured my portfolio, right? I talked about this all the time. Say I had a bad month on options, maybe the dividend side portfolio will hold me off. I have a bad day on dividend side, the option portfolio might hold me off, right? So maybe there'll be times when both of them do bad or both of them do good, right? It happens. It's the market. Not much you can expect. We'll continue to trade TNA, continue to trade spot SPY. The 6 contracts I have on TNA, just an update for you guys. If you guys were thinking, what am I doing with those? I was talking about before about maybe transferring them over to the end of the year. They're expiring in July, and I was thinking of maybe rolling them over to the end of the year. Currently, where I'm sitting, I'm thinking maybe I should just leave it alone. I might just leave that position. Anyways, there's no point of putting more money into the fire. Yes, there's a chance that technically it'll be break even or even profitable over a year or so. But honestly, I don't feel like taking that chance. I would have to throw away roughly 3.5K just to roll it 6 months out to January of 2026. That 3.5K, 3.6K I could use to then just buy another SPY contract, which is a little bit easier to trade. As you guys may or may not know from my videos, they're easier to trade. It's simpler to trade, and it's reliable income, right? Of course, right now is a little bit of aggressive on my trade, so at the moment it's not so reliable. But if you stay consistent, trying to aim for that $100 per contract a week or $400 a month, it's reliable income. It's always there. If I get another contract and I stay at that reliable price, that'll be around $1,200 a month. TNA, if I did that lower contract, I could make $1,200 a month from all 10 contracts, but it's not definite. And also, yes, technically it's cheaper entry to those contracts. Those 10 contracts would be $9,000 roughly, $10,000, which is the same price as one contract on SPY. But it is easier to trade SPY, so I'd rather take the SPY contract. But that's pretty much it. Just a rundown on this week and YieldMax ETFs payments. What we're thinking of the reason why they had such high payments. What were my high payments for AMZY and APLY? 197.37, 252.03. YieldMax, there's no point of showing. YieldMax, it's the same old. I could show you guys really quick, but it's the same thing. 16.79, $107.43. We are almost beating April, so if we get another 16 or 17 cent payment 2 times in a row, we're going to be at the $400 mark. We're going to easily beat April. We're also reinvesting dividends into it, so we'll definitely beat April if we get a 16 and 17 cent payment once again, and we should get another high payment, maybe in the 20 cent mark from YieldMax for week 3 this next week because of the high dividends for this week. So there's a chance we get a 20 cent payment here. Then we're definitely beating April. So like I said, should be a high paying dividend month of May when it comes to the dividend side of the portfolio. But anyways, that's me. That's all my dividends. That's my take on the high dividends payments for YieldMax ETF for this month or for this week, week 2 of dividends, and also how I'm doing currently with my portfolio, how I'm trading it, where am I looking at. And I always love giving you guys these little updates on how the portfolio is going and where am I looking to put my money and where am I planning to go into. So anyways, thank you so much for watching. I'll see you guys next week, which we're going to be looking over our 2-year anniversary holding Tesla. And we're going to be going and trying to calculate the best we can to see how Tesla has done in our portfolio. Have we breaking even? How has it performed? What our dividends are? And was it worth it holding those 2 years? And will I continue to hold it for the future of my portfolio? So anyway, guys, thank you for watching. I'll see you guys next week for that Tesla update video. 2-year mark for Tesla for myself personally. Thank you and bye.